Market Sentiment Data by www.profitableinvestingtips.com. Although valuations drive stock prices in the long term, short-term market movements are driven by sentiment. The stock market anticipates price movements. Positive sentiment is based on the belief that stocks will go up, and negative sentiment is based on the belief that stocks will go down. By the use of market sentiment data, traders and investors find profitable points of entry into and exit from their positions. At the base, market sentiment is driven by fear of loss and greed for profits. These provide useful market sentiment data. VIX Index, put-call ratio, safe haven assets, risk-on assets, high-low index, stock price breadth, CNN's Fear and Greed Index. Current market sentiment. Current market sentiment is a mixture of bullish optimism and fundamentals-based bearish pessimism. The market crashed at the onset of the COVID-19 pandemic. From February 20th to March 23rd, the S&P 500 lost ground from 3386 to 2237. The worst hit were airlines, hospitality, and anyone in the travel industry. Tech stocks suffered the least and have led the charge as the S&P 500 recovered to 3580 by September 2nd. Along the way, the airlines, aircraft makers like Boeing, and folks in restaurants, hotels, and travel have made only slight gains. Optimistic investors believe that the COVID-19 crisis will go away with vaccines, while at the same time the economy is in awful shape, with millions unemployed and millions more running out of money. With these factors in play, current market sentiment is a mixed bag. Best market sentiment indicators. Because the stock market always looks forward, we would like to use the best market sentiment indicators to help sort out how to invest in the coming weeks, months, and even years. The most popular indicators of market sentiment are the CBOE VIX, High-Low Index, Bullish Percent Index, BPI, and important moving averages. The VIX is also known as the Fear Index. It looks at options trades as a measure of how much the market is protecting against risk. The High-Low Index tells us when many stocks are trading at their 52-week highs, which indicates a bull market, versus how many trading at their 52-week lows, indicating a bear market. The use of moving average helps put this information into perspective. Market sentiment graph. For many, if not most of us, it is easier to read market sentiment data from a market sentiment graph than from a written explanation. And on a graph, it is possible to combine information in order to give a better picture of the market sentiment data the graph contains. As such, a graph can contain information from the CBOE put-call ratio, a all-bull ratio, bullish ratio, NAAIM survey, and current high-low ratios. This snapshot gives the investor an up-to-date picture of market sentiment in order to guide their purchase and sale of stocks. Cryptocurrency market sentiment. Reading cryptocurrency market sentiment is a bit different than following market sentiment data for stocks. Volume and volatility of trading read at 15-minute intraday intervals, and the use of Raven Pack to see sentiment in non-scheduled news reports about Bitcoin and 6 fiat currencies. It is of note that many investors experience positive returns over time irrespective of the news and prevailing cryptocurrency market sentiment. In this respect, we can sort out cryptocurrency traders versus long-term investors and the effects of current sentiment on each. CNN market sentiment. CNN Money provides a useful measure of market sentiment. Their Fear and Greed Index is based on 7 indicators: junk bond demand, put and call options, market momentum, stock price strength, stock price breadth, market volatility, and safe haven demand. This composite of market sentiment data shows very clearly the greed and bullish sentiment at the end of 2019, followed by the bearish fear that came on with the COVID-19 pandemic, followed by the hope and greed that drove the market back up while the economy suffered in 2020. Daily Forex Market Sentiment. Data used to indicate the daily Forex market sentiment are similar to what is used for the stock market. However, the news has a broader scope than the U.S. stock market because it has to do with currencies and nations scattered across the globe and a market that is open 24 hours a day on working days all year long. Global politics, as well as the relations of one nation to another, are important in Forex trading, as currencies are traded in pairs. Nevertheless, market volatility, volume, and moving averages work just as well as indicators in the Forex market as they do with stocks. RiskOff Market Sentiment. Optimistic investor sentiment goes with good news about the economy, industry, global politics, and steady profits. This leads to a risk-on investing environment in which investors pick riskier assets in hopes of big profits. When things turn around and investing looks chancier, it leads to a risk-off environment in which investors shun risk and prefer stocks over bonds and value stocks over growth stocks. Risk-off market sentiment is generally easy to spot as the entire market pivots to value instead of growth and bonds instead of stocks. For more insights and useful information about investments and investing, visit www.profitableinvestingtips.com.